There we go. Good afternoon, everybody. My name is Rob Searle, and I'm one of the working group members for the ACT's Future Leaders in Treasury. And on behalf of the team, I'm pleased to welcome to this event on Future Leaders Priorities for 2021. We've got a pretty packed agenda, so without further ado, let me give you a flavour of what we've got planned for you today. Firstly, we're going to cover some business priorities, including day-to-day treasury, how this has changed and what we see for the future, including systems developments and governance. Then we'll cover the people priorities, including personal development and managing external relationships. And finally, we'll hopefully have some time for some Q&A, so please feel free to ask at any point. And if I can just start with some quick introductions from each of the panelists. So Sam, if I could start with you, if that's okay, please.
Yeah, thanks very much, Rob. I'm Sam Robinson. I work as the Deputy Treasurer at Untitled Chapter UK. Untitled Chapter UK is a non-bank provider of loans and leases to individuals and businesses in the UK and Europe. My job primarily is to manage the debt issuance from capital markets, hedge our interest rate and foreign exchange exposure.
Thanks, Sam. Ollie, over to you, if that's okay, please.
Yeah, thanks, Rob. My name's Ollie Stubbs. I work for NatWest in the real estate sector. So I manage the transaction management and advisory team here at NatWest. So manage transactions in the bank debt market for real estate and housing association customers in the mid to large corporate sector.
Very good. And Camilla?
Thanks, Rob. So I work at PwC, been here about 5.5 years. I tend to do advisory projects for my corporate treasury clients, helping them with treasury transformation, technology and controls. And actually before PwC, I've been on both sides. So I used to work in Tesco's front office treasury department, and before that worked for a niche bank.
Okay, thanks very much, everyone. I think we're lucky to have such good panelists today, and so we're going to sort of, without any stopping, we'll go straight into some of the questions. So day-to-day treasury has clearly changed a lot over the last 16 months, and most of us will have initially been working within survival mode. I think across all banks, corporates, and consultancy functions, I'm sure. Hopefully, we've now moved to what is termed as the new normal. But what is that normal, and what are the key issues sort of on the horizon? Sam, if I start with you, please. So from a corporate treasury, what is the new norm in your day-to-day role?
Yes, I mean, obviously the last sort of 15, 16 months has been a bit of a whirlwind. Obviously, we had the initial kind of shock and period of concern where, like many corporates, we're starting to think about how we're going to survive this sort of stress situation and what's our funding going to look like. Obviously, it was good to see that the Treasury and the Bank of England announced their sort of corporate CP schemes and various other schemes that helped corporates. Unfortunately, we weren't eligible for those because we were regulated by the FCA, and as we weren't a bank, we weren't eligible for lots of the other bank schemes like funding for lending. So that put a kind of big restriction on us, and we kind of we had to look very strictly at our liquidity management and how much money is going out the door each week. So we kind of took a lot of our cash forecasting from a monthly basis to looking at every week. That was also present because we saw the CP market completely dried up, which is quite normal in these sort of times of stress. We were quite lucky, really, as we had Japanese banks, investors that were happy to support us because of the Japanese name, which was much appreciated. We found that because obviously much of the high street in the UK completely shut, we suddenly had much lower business volume. So as last cash was going out the door, that kind of helped us because our assets are self-liquidating as customers start to repay their loans. We also, as interest rates fell, a lot of the customers started repaying early as well because they could refinance cheaper elsewhere. So we kind of have moved from that kind of crisis state to a more normal state now. We've gone back to looking again at monthly kind of cash projections as things have returned more to normal. I guess we also were hurt partly because one of our key members of our team actually contracted COVID early on as well in the pandemic. So that was, he's fine now, but that was quite difficult losing someone that's a key part of the team for a few weeks. So yeah, I mean, we also had, luckily a lot of our operations were paperless and going into the pandemic as well. So that made things like going for an audit a lot easier because we didn't have to send somebody into the office reading through files and trying to get original signatures and things like that. So in terms of the new normal, I think it'll probably involve a lot more video calls. a lot of the changes that are already happening around flexible working, having less less kind of paper-based operations, well, hopefully they've been sped up, and we'll continue to see more of the same, and hope it vindicates the approach that we're taking, that we can say to investors actually that we survived this kind of crisis without any support from the government. We've had strict kind of ALM and prudent management of the business, credit criteria, and that's all held up.
Very good. Yeah, thanks a lot, Sam. I think there's been a lot to take in, that's for sure. And I think moving on to you, Ollie, that the two areas that were very apparent from what Sam just said, and I guess probably many of us have become familiar with, is sort of how you manage your funding and the governance around that, obviously with people not being at the office. So how have you seen what have you seen as the key issues in those areas in your role?
Yeah, thanks, Rob. So, I mean, sort of talking from my customer's perspective in the real estate sector, I guess initially the response was very much to kind of protect funding sources. So we saw a lot of drawdowns on RCFs and things like that. And we also saw a lot of customers looking to take advantage of some of those government schemes. I was in response to the bank market changing and retrenching as it usually does in crisis. So the availability of capital, reduced maturities on refinances, things come in. Banks that are typically active in our sector, foreign banks, kind of retrenched initially. A lot of that seems to have come back now, particularly for customers I look after. So the kind of maturities have gone back out to what people could achieve before the crisis, pricing back in towards where it was before, and availability of capital improving as well. So I think the issuing market, and from a bank and also from what I see in the capital markets, is much improved. I think the other thing probably to say on that it does still seem to be quite sector specific. So for instance, I look after house building sector. Initially at the peak of the crisis, we were seeing forecasts of kind of things like no sales for 6 months. That was a worst case scenario, I think. But when the market did reopen for sales in kind of May, June last year, as I'm sure many people on this call appreciate, the housing market picked up pretty swiftly in the UK, and a lot of our customers are kind of had very strong years. So other sectors are clearly more challenged given some of the changes that we've seen in the pandemic. Then I guess, Rob, picking up on that governance point, yeah, I guess similar to Sam, we've seen a lot of move to paperless kind of work, a lot more video calls. I think one of the things that we've really tried to at NatWest retain is some of the quicker decision making that we needed to put in place to roll out things like C bills, CL bills, and some of the other products and changes to our products to support customers. So those decisions needed to be made a lot quicker than we would usually do and go through governance, and a lot of what we've tried to keep, and it is a big challenge not to kind of go back to old habits, but it's to try and keep some of that swifter decision making, which helped us through the crisis.
And just on that, I know that, do you envisage the quicker process to remain? Because I think from you and I both in the bank side, it's something that corporates are very keen on always hearing, is how quickly can things be done. Do you think the delays or the speed will be here to stay?
Yeah, I think, I mean, from when we're dealing with customer requests from a bank perspective, we're always, trying to get that done as quickly as possible, managing expectations. I think what we probably saw more of is around some of our, kind of back office and internal governance processes changing, and I'm sure people within the Treasury sector would have seen that as well, because decisions just needed to be made quicker. Jury's out from my perspective about whether that's going to stay or not. I'd love to think that we'd all become much more efficient and keep some of the good ways of working, but it is obviously it's quite a challenge, and it's quite easy to fall back into bad habits.
Yeah, of course. Okay, thanks. So I guess, Camilla, I guess the pandemic from your side has probably changed a lot of projects that your clients have been looking to do, or have you seen big changes in that as a result of the pandemic and stuff being put on the back burner, or what's your thoughts on that?
Yeah, so very similar to what Sam said at the beginning. At the start, there was a real concern about how are we going to get through this, how are we just going to do our day-to-day jobs. Not all of my clients were set up for remote working. So at the very start of the pandemic, I think major projects went on hold unless it was essential, and it was let's put our heads down, let's just get through the job, what we need to do. Saying that, within about 1 or 2 months, I think things stabilized. I think people realized that they could work remotely okay. And there was also that realization that actually we're going to be here for a while. So things started picking up again. I think the kind of 3 areas in particular where I've seen growth and a focus on is controls, cash, and technology. So to go into a little bit more detail with controls, we've been speaking to quite a few clients about how can they ensure they still have the same level of controls when working remotely as in the office. For a lot of senior treasurers, that's a concern as well, that they don't have as good oversight, they can't see what's going on. So we've been really looking in to make sure that the controls are set up and that these changes in processes are still secure. Now, a big part of that is actually cyber risk. We've noticed a big increase in cyber attempts, so phishing emails. And one area in particular for treasurers is around bank details. So what I've seen a couple of cases is, my client's got a really secure, controlled environment. They're on top of the cyber, but their vendor or their supplier doesn't. And then someone has hacked their emails, they've requested a change in bank details, and then subsequently payments go to the wrong bank accounts. So we've been helping clients look at, putting in callback processes or different processes to really authenticate who they're working with and making sure they're not falling for that. Number 2, cash. I won't go into too much detail because I think Sam and Ollie covered that, but obviously there's been a massive focus on cash. So making sure they can get that cash visibility, what's going on, a lot quicker so they can make informed decisions. And there's been a focus on really enhancing forecasting. So making sure that it is flexible enough that you can update the assumptions as things change, because as you've all seen over the last year, the rules change each month, which has an impact on my clients. Now, I think the third one, technology, has been a really, really interesting one. So, you do always have your TMS selections and transformations in the background, but I've seen a bit of a shift into, okay, what is next? What are the add-on systems that we can add on top? So I've been working with treasurers. We've been using our Treasury Maturity Assessment tool to work out what are their pain points. And then within that, we're looking at things like cash analytic fintechs or BI reporting to just add on to what they're doing to increase both efficiencies, controls, and reporting. Now, with technology, the one bit that's been a bit unavoidable is ERP upgrades. Now, one example of this is SAP is moving from ECC to HANA, so you'll see a lot of finance departments going through this change. Now, naturally, some treasurers might not think it might not impact them apart from the interfacing area. But actually, we've been working with them to investigate, how they can take advantage of it. A lot of these ERPs have got fantastic cash and payments functionality. So we've been working with them, assessing, whether it's worth looking into these finance systems, and more importantly, how they can make sure they're in the room when these conversations within the finance departments are happening around the technology. So in summary, the 3 things that are really being focused on at the moment are controls, cash, and technology.
Really interesting, thanks. I think there's a whole other topic of conversation about technology, given how much of a buzzword it is across all sectors, I'm sure, at the moment, but it is very relevant and you can't forget about it. So I think moving, I guess, from the business side of the pandemic and what's happened and what's going forward over to the people element, which hopefully a lot of people who are listening in are quite interested in. And we have had a couple of questions which we'll get to shortly. But I think just to start with you, Sam, again, is what sort of challenges have you seen in personal development for you, but I guess also for the wider team that you work with, or maybe the people you manage over the last 14, 16 months?
Thanks for that, Rob. So in my perspective, it's kind of a tale of 2 halves, really. It was early on, things really came to a bit of a standstill. You can obviously call people fairly regularly and stay in touch that way and have virtual events, but it is not always quite the same in terms of having those kind of more informal conversations that you would maybe have if you met up and went for a drink with somebody or had a less kind of informal meeting. things like obviously the virtual ACT dinner were a great way to stay in touch. I mean, I was actually surprised how much I enjoyed it last year, because the prospect of staying at home kind of in a suit at my desk till 10 p.m. or not 11 p.m. wasn't that appealing, but actually I had a really good time, and being drunk at home in my study was actually quite enjoyable. I've also, I guess, as things have eased and the restrictions have got a bit better, I've been been quite lucky. Actually, one of our relationship managers lives on my road, so we've been able to kind of walk and go for a coffee around the park, or play a game of tennis or something like that, which or golf, which, considering I have no hand-eye coordination, has been quite a new experience for me. But I guess, yeah, I've kind of made it work, but it's very easy to get kind of sucked into this environment where you stay at home and you just do your job all day, and you log off at whatever time you log off, and you don't really interact with anybody. So I think it is really important to try and especially look externally, keep in touch with people over the phone, and try and arrange these meetings, even if it is a bit more difficult or a bit different to what it used to be, which might be going out for a meal or going down to the pub. You can instead go play tennis, or go for a walk and a coffee, or go for a cycle ride. From the team perspective, it has been a bit more challenging. We had a new starter who joined, and within 2 weeks of her joining, we went into full lockdown, which has been more difficult. I think the things that you sort of don't really appreciate is that when somebody starts, there's a lot of sort of skills that you would know, or things you would notice around the office, where maybe on Bloomberg they're not quite as proficient as you realise, and unless you kind of see them sort of being slow with something or not knowing how to do something, you can't really see it and correct it as much. So that's something we've had to work on. I mean, obviously, just building the relationship with a new employee is also takes a bit of time. So trying to just kind of pencil in more regular calls, putting in more meetings, having training days with them, whether it's just showing them how to do things on Bloomberg and then getting them to share their screen and show you. It is more difficult, but obviously there's ways around it, and there's ways that we've kind of made it work.
Yeah, and I guess just on that point, one of the questions that has come up from one of the audiences that have the turnover of staff. Have you seen a bigger turnover of staff, or changed, or if not a turnover of staff, sort of a definition change of roles within your team during the pandemic?
Not really within our team. I mean, we've been quite lucky. I mean, so we've done a few surveys of employee satisfaction around the company and things like that, and actually, people seem to have really appreciated the way the company's handled it. We didn't try and force anyone back into the office. We've been quite clear throughout that we're going to look at this and consider employees' preferred approach when it comes to working. We're taking a more flexible approach. One of the things that we sometimes struggle with as our office is sort of just outside London, not in central London. So sometimes we'd struggle to get some of the graduates that wanted to live in London to come and work for us. We've sort of had the feedback now that actually the kind of more flexible approach and the less frequent commute has made it a more attractive proposition to come work for us. So we haven't really seen an increase in turnover or anything like that.
Cool. Very good, thanks. And Ollie, what, I guess, on the point of advice would you want to give to anyone who's experienced challenges with their development throughout this period, or of course someone starting in a new role within this time as well?
Yeah, and I think it's a great question, and it is really, really difficult. And I think one of the pieces of advice I give to guys within my team or across NatWest is it's actually great to recognise that a lot of other people are in the same situation and are having the same challenges, and you're not on your own during the time and the challenges of joining a new team or a new organisation. And one of the other questions that we had on the chat is around, has there been a difference between younger and older colleagues? And I definitely have seen that at NatWest. My older colleagues are typically, maybe living outside of London in larger houses, more space. So have really benefited from not having to commute. They also tend to be, kind of more experienced in their role. So working at home, working remotely, and not having that constant interaction with other people in the office is less of a challenge because they're more familiar with what they need to do. I think the big challenge for us has been, in our graduate or more junior populations, where the lack of interaction in the office has been a real challenge for training. And also those individuals have often been in, kind of shared houses, so working from their bedroom, or, not with the same kind of office setup as other people have had. I think childcare has probably been the other main difference between how people have experienced working from home and working remotely. So been a lot of challenges for people to manage with young children, with schools closed and things like that. I guess from my personal perspective, some things that I've done to help my own development. I kind of realized back end of last year, early this year, that I just wasn't getting that interaction with people across the organization, from those kind of water cooler moments or meeting in the lift going up to my floor in the building in London. So I've been setting up a coffee with one person internally and one person from my external network each week, just for a 15-20 minute catch up on Zoom to see how they're doing, see what they've been working on, and just have a general catch up. And that's been really, really impactful for me to kind of begin to kind of understand and get back into that kind of networking, which I had let go a little bit as we all went remote and working from home. I think that's also a really great way for people starting in a new organization or new team to help facilitate that move. And I've found in general that people are really have responded to that really well, and are pretty keen, because they're feeling similarly lonely working at home and want to talk to someone else as well. So that's worked really well for me.
Yeah, it's quite interesting, all the sort of points you've made are things that you've either heard someone speak about or you've seen yourself. But I guess to Camilla, feeding onto that, has it led to changes in the relationship dynamics, both internally and externally? I guess from you in the last period.
Sure. So I'll start with internal first. And, we face some of the similar challenge that Ollie and Sam have spoken about. And, we're trying to balance keeping those relationships, but also being aware of the fact that people are having Zoom fatigue. I think people are sick of being on the camera all day. So it's been an interesting challenge. But what I found with our team is that actually we've never been stronger as a team. So at the beginning of COVID, what we did is we put in regular catch-ups as a team, no agenda. It was just purely personal. How are you doing? What have you been up to? And it's been such a fantastic way of getting to know the team, getting to know people you wouldn't work with. We're a team of about 50 people, so odds are you're never going to speak to some of these people, but this way you're getting that insight into their life, and it's been a really great opportunity. And I think the key thing is actually, how do we ensure we do this going forward when things go back to normal? I really hope we continue these meetings and continue this bond that we've got. I think another thing I've noticed, one benefit actually of this on internal relationships, and I think goes back to that question about senior and junior staff, is what I found is that sometimes there is a gap between junior and senior staff, and some of the junior staff, in particular female, when dealing with older males, is they say they don't have anything in common. How can they build that relationship? It's difficult. But now we've all gone through the same trauma. It's a really bonding experience, and it's just an easy thing to talk about, and it's helped build relationships in that way. I think in terms of internal relationships, I think the biggest challenge is going to be, what are we going to do when things go back to normal? And some people are in the office 5 days a week, and some are only in the office a few days a week. How do we ensure that we're coaching evenly, that we're spending the same amount of time with people? And at year end, when it comes to performance assessment, how are we measuring people equally? So one of the things PwC has done is they brought in a thing called the DIL. And one of the rules is that they expect people to be in the office 2 to 3 days a week at a minimum. And I think that's quite a good way, because it sets the bar. And actually, if you're in the office 3 days a week, you're still getting that visibility, and it gives people the opportunity to work on those relationships. Now, from an external perspective, there's definitely been challenges. You're missing those coffee chats. And for me, a huge part of my job is building relationships with clients and with software vendors to know what's going on in the market, so I can best advise my clients. But saying that, there have been a couple of really, really good benefits. So the first one is, previously, if I wanted to have a catch up with a vendor or client, for a 1 hour meeting, I could easily be traveling most of the day, by the time I go there and back. Now I'm finding I'm able to have more meetings, and it's easier to balance with my client work, because it's just an hour meeting in front of the laptop, and then you move on to the next thing. I think the second way it's helped with external relationships is actually helping junior people build those relationships. So if I'm speaking to a vendor or client, it's a lot less intimidating to bring a couple of people on a virtual call than it is in person. So it's been a good way of helping other people build their relationships. I think for me, the third one, which has probably been the most interesting, is building relationships for client events. So previously, I'd run a client event, I invite all my corporate treasury clients, but realistically, only the people who live in London are going to attend. Now I'm getting a much, much bigger geographical reach, so I can invite people who are outside of London and even outside of the UK. Now, look, the downside is you miss that natural chit chat you get, before the event, after the event, but it's all about thinking creatively. So when we do a virtual event, we'll have breakout sessions. So you're still having those conversations and still building your network. So overall, there's definitely challenges. I think external relationships, it's a lot less natural to build your relationships virtually, but as long as you're creative, there are really some benefits to it.
Yeah, I think actually one of the questions that James has asked as well, which sort of feeds into the points that you three have made, is around job security, which I mean Sam touched on to some extent, but I guess I'd be interested, Sam, not so much maybe on job security, but what have you found that there's further pressure on employees to work harder and longer now that, I know that maybe you've all felt it as well, that your computer's always near you when you're working from home, so the opportunity to work is there. Have you found that your employees have felt that pressure, do you think, or how do you feel that's gone?
Yeah, I definitely think some people have felt that way. I think there's also been a lot of people who feel like perhaps because they're not doing the commute, they have to put those extra few hours into work, and obviously it's difficult to leave the laptop alone. I guess it's a habit you have to kind of slip into, I guess, and I think equally it's quite easy to do that in the office as well. So I mean, a lot of people have this habit of just doing FaceTime to kind of be seen to be in the office and trying to impress somebody. So I think it probably it's a thing that needs adjusting. There's an element that will happen probably regardless of whether you're in the office or whether you're at home as well. I guess in terms of, and as a company, we're trying to do more things to try and stop that, but and try and encourage people to take annual leave and share pictures of their annual leave and things like that. But I guess it's something that probably will continue to happen regardless of whether you're in or out of the office.
Yeah, I mean it's a valid point. I mean, even in the business I work in, there was enforced annual leave at the end of last year because so few people had taken time off, and I'm sure everyone was in the same boat, because you think, well, you take time off and you're just going to sit at home, so where's the fun in that, because you can't travel. So yeah, I mean, I think it's really interesting, all the points you've made, and I think we have put aside some time at the end which for Q&A, and we have actually got some questions that have come in, so I might go through a few of the questions with you if that's okay, and feel free to sort of answer as you feel free. But so the first one here, which I'm looking at, is in this post-pandemic world, what leadership models / leader attributes will inspire the younger generation? So Ollie, I might start with you, and Sam and Camilla, feel free to sort of interact as you feel wish.
Yeah, I think I pick up some points that Sam and Camilla kind of raised earlier on this. Actually, I think one thing that has worked or has been seen to work quite well at NatWest is, there's a genuine perception, and I think it's true that leadership have really cared about the well-being of people across the business over the last kind of 12-18 months, and tried to put the well-being of people and their safety first. So I think that's been quite inspiring, and certainly affected me and helped me kind of engage more with the corporate that I work for. I think the other thing that is kind of changing, and that was changing kind of pre-pandemic, but probably accelerated slightly, is a more of a focus on ESG issues. NatWest itself has released a kind of a purpose-driven strategy in February last year, and I think kind of corporates, banks, etc., are now really focused on serving wider stakeholders and just shareholders, and I think that's been really important for getting people to engage with the strategy of the company, and in particular for younger generation and attracting talent into the organisation. That's been crucial to being successful in that area.
Yeah, it's interesting. Camilla, do you have anything that you'd like to add on that?
Yeah, I mean, I think, I'll echo what Ollie said. I think demonstrating care is a really, really strong thing. And I think leading by example, because also in PwC, we've seen plenty of examples of people not taking holiday because there's nowhere to go. And actually, I think at the beginning of this year, you could see there was a lot of burnout coming up because they're not taking holiday. It's hard to have that switch off between work and pleasure, because you've always got your laptop there, you've always got your phone there. And I think what has been great has been seeing those senior people who are not just saying, make sure you have a work-life balance, ones who are actively promoting it. So, making sure they can schedule emails if they're working late in the morning, or if someone sends something over the weekend, making it clear, don't look at it until the week, not to your working hours. I think the other essential thing for now and also going forward is just demonstrating that flexibility. So able to adapt to different changes, but also flexible working style. What I've seen is traditionally some of the more senior people, they were used to being in the office all the time. And there was a mentality with some of the people I worked with that, well, if you're working from home, you're not really working. And actually now that they've been at home working, I think they're starting to realize that actually you can be quite productive. And I think seeing them encouraging work from home and flexibility when we go back to normal will be a really strong thing, because I think especially, the new people joining now all be very much used to working remotely, working flexibly. And I think we just got to ensure that the leaders continue that going forward.
Yeah. I think, so Sam, this one probably fits quite nicely into you. So has the value of the treasurer, it's broad and difficult on this one, has the value of the treasurer increased since the pandemic?
Yeah, I'd say so. I mean, obviously, the treasurer's value, or the treasurer's role, really is to manage financial risks. So when things are in flux and lots of things are changing, that's obviously going to mean that people go to treasurers and ask them key questions around the organisation. I mean, obviously, one aspect of that would be suddenly when we're in the pandemic, people are talking about negative interest rates in the UK. That's an old conversation that we weren't having before. There's obviously a lot of questions then that senior management are going to go and ask Treasury, and we have to be there to kind of do that work and answer those questions. And I guess coming back to where, again, what Ollie was talking about as well around the ESG aspect, that's something that's been getting broader and broader. And Treasury really does need to take a key role in that sort of ESG project and make sure that we're kind of helping bring that into our financing and make sure that our whatever we agree in our financing is harmonized around the organization.
Yeah. And I guess on that topic as well, there's a sort of another question around, have you seen a shift in the positioning and a need for increased investment and added focus on corporate treasury since the pandemic? I think so Sam's made it, it's pretty obvious that treasury has become more on the focus side, given the sort of the core element of the treasury role. But have you seen with some of your clients a sort of more investment going in even at a difficult time like this?
It's been pretty mixed. I mean, we've obviously a lot of our clients are small businesses, so small to medium-sized enterprises, and then the largest part of the business is more kind of individuals. So it's, I think, as Camilla and Ollie said before, it's kind of patchy. You get some areas where people might be doing more sort of home renovations. So you see lots of investment where we can help finance there. Especially with things like Brexit as well as COVID, you've seen kind of a slowdown in some areas like construction. So some things have been kind of doing quite well, and some things have had a dip and then have recovered, and some things have been a bit more slow to recover.
Okay.
I think vehicles is one area where actually it's been quite strong as well, which was quite surprising that we saw the sale of vehicles kind of in the pandemic actually held up pretty well.
Yeah. Sorry, Ollie, I interrupted you.
No worries. I was just gonna build on what Sab says. I think that the investment question, from what I've seen, has been A, very sector dependent, and B, also very customer dependent. So some customers have been quite innovative, from my perspective, have been quite innovative around the investment decisions that they're making. Others have held out for understandable reasons about trying to assess what the new normal is going to be, and what how they're going to manage the risks and what the opportunities are. So I think it has been a real challenging and uncertain time. and kind of linking back to that question, that has obviously, as Sam said, has really placed the corporate treasurer at the centre of a lot of those discussions and decision making, and it'll be interesting to see how much that goes forward as hopefully things return a bit more to normal, new opportunities open up, and whether treasurers kind of can continue to have that central role and build those stakeholder relationships that they will have developed over the last 12-18 months.
And Camilla, over I guess sort of to finish off, have you seen similar sorts of themes as well?
Yeah, the thing with Treasury, it's because they're usually cost centres. There's always been this struggle to get funding for certain activities. And, you know, for me, I've always thought cash forecasting is at the heart of Treasury. I've always pushed for it. And a lot of time when we've spoken to clients, they say, well, you know, we're okay now. We've got the cash surplus. We're doing fine. So there's not that business case. Now, suddenly there is such a strong business case for it that we have actually seen finally that investment. And actually, if you look at things like cash forecasting, really, you could probably do projects for £20,000 to £50,000. So it's not the biggest dip for a company. So there has been an increase from that perspective.
Yeah, I mean, liquidity really did come into the forefront of everyone's mind, didn't it? So I think, as Sam said right at the outset, cash forecasting, I think you usually said you do it for monthly, it became weekly. So it was that was a very big change for, I think, every sector, no matter where. There's a very simple question, but I'll ask all three of you. Start with you, Sam. Looking down the line, how many days do you think you'll be going into the office?
Good question. I don't think there's a set answer really. I think for us, and for me particularly, it's all about flexibility. So if there's a week when, say, that we've got a series of meetings, or I need to be in the office and it's most effective for me to be in office, I'll go in 5 days a week. If there's a day where I don't really need to be in office for anything, and potentially there's something that I need to focus on, it'd be easier for me to do at home without the distractions of people coming up to me and talking to me. I might spend, I don't know, 1 or 2 days in a week. I probably would balance out at 3 roughly, but I think it's the key approach is not a set. You have to be in so many days, or you have to be at home so many days.
Ollie?
I think it'll be a couple of days initially. I think we'll be sort of transitioning back into the office in September, very much dependent on the kind of progress with the COVID pandemic here in the UK. But I guess in a couple of years' time, I think that is a really interesting question. I don't know what the answer to that is, and I think you know, in our team at the moment, we're spending a lot of time looking at what the future of the office space is going to be, because a lot of our customers are heavy investors in that sector. So it's quite an interesting question for us. Are people really going to get what they need out of only 1 or 2, 3 days in the office, or are we going to actually, when we all come back, we're going to actually, you know, enjoying having that interaction, enjoying getting out of the house, and actually move to a model where there's more time in the office? So I think outlook is very uncertain about, you know, more than 6-12 months out, but initially I think we'll be back in a couple of days a week.
Cool. And I think we've just got time for the same question for you, Camilla. I know you mentioned what your business is doing already, but do you think that'll be consistent?
I think it's similar to Ollie. I think it's very uncertain at the moment, and especially for my job, I think it's very client specific. So, you know, some clients, I imagine now that they're enjoying working remotely, if they're working remotely, they're not going to need us in, so we won't need to be around. While some, I think, will want to have that visibility, so we'll end up being around a lot more often. But it will very much depend with who I'm working at the time. Some people I speak to say, you know, we're going to go completely back to normal, and some the other end. So at the moment in my head, I'm guessing around 2 to 3 days a week, but I guess we'll have to see.
Perfect. Well, I think we're running out of time, so I think I just really want to reiterate my thanks for Sam, Ollie, and Camilla for giving up their time today to have this discussion with myself. And on behalf of the Future Leaders Group, we're very grateful. I think the conclusion is flexibility and planning, from my perspective, are 2 things that we absolutely need to be focused on going forward. But it's certainly been an interesting period, and grateful for your time today. So probably sign off there. Thanks very much, everybody.